The idea, really the birth of the idea was how can we replace our paychecks? So MSTY is a very, very popular high income ETF that is very, very misunderstood. Number one thing, what's inside the ETF? Because that's really what you're investing in, right? So MSTY basically gives you exposure to MSTR stock. So because MicroStrategy or now strategy is such a volatile stock, that brings in a lot more premium. Hence the crazy yields you could sometimes see on MSTY. Another thing that's very important is the time and all the energy you spend thinking about when do I sell, how much do I sell. Bitcoin is down, I have to sell some this month. Another thing you got to remember, like we discussed, is that, and Michael Saylor talked about this, he's like, over the years, volatility on Bitcoin should drop, should go lower. Now, if that happens over time, the yield of these ETFs is going to go lower and lower because the yield is based on covered call premium, which is based on volatility. If your objective is not return and it's maximizing cash flow, Yield Max is a great ETF provider for you.
Guys, welcome back to another show today. I'm here with YouTube legend, actually one of my favorite content creator, Adriano. How are you doing today?
Good, how are you, Mauricio?
Thank you, I'm great, and congrats on the 100,000 subscribers on your channel, which will be, as always, in the description down below. Do you mind to give us an intro and tell us a little bit about yourself?
Sure, my name's Adrian. I live in Panama City. I live in Panama for about 3 years now. So I was born and raised in Montreal, Quebec, Canada. You know, standard life, I guess. I went to school. I went to college. I took computer science, and I was not good at the programming. I was very, very bad. I think you're really good at that stuff, the technical stuff. I'm not. I wasn't. I just went into computers because I like playing video games. I mean, it was as simple as that. I had no idea what to do. In Quebec, by 16, you have to decide what you want to do because college is earlier. So it's very strange to decide that early. But I went in computer science, and the second year, I started like flunking out of my programming classes because I was just so bad at it. C++ and Java and all things people don't really use anymore. But right before the class ended or the summer was going to start, our teacher asked if anyone's looking for a summer job at this company called CGI, one of the biggest IT companies in Canada. It still is. And so I said, yeah, and I got a summer job there doing technical support. I remember back in that day, the minimum wage was like $7. And I was started at $15 an hour. So I was like super happy. I did the summer there downtown. I had to buy like a dress shirt and stuff. I was just a kid. I was like, 18 or 19 or something like that. Really, really loved it. But then when it was time to go back to school, I was miserable. I went back to school for like 2 days, and I just called like the team leader and like, look, I can't do this. I want to come back to work full time. They said yes, and I came back, and that's all she wrote. I stayed there for about a decade at that company, moving up the ranks. And I met my wife there as well, Erica. So we both worked there. We moved up, got married, did a basic 9-to-5 job. And then eventually we figured out like, oh my God, are we going to do this till we're 60, 65? This is not going to work. I mean, it was a good job and everything, but didn't see ourselves doing this for another, 20, 30, 40 years. We kept seeing people celebrating their like 30, 35 year work anniversary, and they get like this little watch. And then we were looking and we were like, oh my God, that can't be us in 30 years, right? So we decided to put all our disposable income in our mortgage payoff. Let's pay off our mortgage as soon as possible, at least, because we weren't really into investing that much. We didn't have much knowledge on it yet. I was investing here and there. It was really swing trading what I was doing. I was just buying companies that I knew from Canada that were in the pits, and I said, I'll make a quick buck. I'll buy cheap and I'll sell it later. That's swing trading. It's not really investing, but I was mostly doing it on the side while paying down the mortgage really, really quickly. But then after 7 years, so we paid our mortgage, our 20-year mortgage in 7 years, and then we had a lot of disposable income, and that's when I started doing the research. Okay, what are we going to do with all this disposable income? So that's when I started researching, dividend investing, dividend stocks, and high yield funds. The idea, really the birth of the idea was how can we replace our paychecks? That was the original foundational point of the channel that I have now, Passive Income Investing, which is just a channel we created. We started to show other people what we did or what we do. So that was the birth of the channel. But the birth of the idea was, how can we replace our paychecks and really get that financial independence, that financial freedom? So in a nutshell, that's pretty much our story. And from there, the ETF landscape, especially the high yield, the income oriented landscape, started exploding in both Canada first, and now it's really going crazy in the US as well. So there's a lot more of these high yield income oriented ETFs where the foundational strategy is the covered call option strategy, which I'm sure we'll talk about today. That's pretty much a quick summary of pretty much my 40 years, I guess, of life.
Thank you so much for the lovely intro. And that's how I found your channel, Passive Income Investing, because I was actually Googling on MSTY, because I'm myself and my audience, we are familiar with the ETF. Of course, this is a Bitcoin channel, so people understand mainly Bitcoin, self-custody, and all that kind of stuff. But when it comes to ETF, I think it's easier to understand. So what Michael Silder is doing with Strategy now, rebranded from MicroStrategy. But when it comes to MSTY, now for me, that's a little bit tricky to understand exactly how it works. And that's why I'm super excited to have you here, because who better than you can explain to us what the hell is MSTY and how does it work?
Yeah, I mean, MSTY, the video I did where Michael Saylor went on a podcast, a very popular podcaster, PBD, Patrick Bet-David, and he actually talked about the ETF. He mentioned it. I don't think I think he mentioned the name, yeah, MSTY. And he says, they just sell the calls, they just sell the upside. So I'm sure a lot of people didn't understand that, but I know exactly what he was talking about. So MSTY is a very, very popular high income ETF that is very, very misunderstood. I'm looking at the assets now. There's almost $5 billion of assets in this ETF. That is huge for a very, very niche ETF like MSTY, right? So in short, it's not that hard. It could be hard to understand MSTY if you go on the web page and look, okay, what's inside this ETF, right? Because when you're looking at an ETF, the first thing to do when you want to try to understand what it does is, first of all, number one thing, what's inside the ETF? Because that's really what you're investing in, right? So MSTY basically gives you exposure to MSTR stock, right? That's its primary function. Now, to give you that exposure, it does something very complicated. In Canada, it's called a synthetic structure. They get access to the stock price movement of MSTR stock. They don't actually hold the MSTR stock, right? So in Canada, it's the opposite. They keep it simple. They have a bunch of MicroStrategy or now strategy covered call ETFs or income ETFs. They'll just hold the MSTR stock and they'll write covered calls on it. MSTY, a little bit different. They hold it synthetically, which means they don't actually hold the actual stock, but they use options. And I'm not going to get too into it because it's a little bit complicated and even I get confused with it. But by using a specific set of options, they match the price movement of MSTR stock. So it's almost like you're owning the MSTR stock. Well, that's what MSTY actually has inside. But if you look at it, you're going to see a bunch of like U.S. government bonds, and you'll see like MSTR C, MSTR P. That's a call option. That's a put option on MSTR. And basically, when you're getting exposure to MSTR synthetically, you don't actually have to hold a stock. So that frees up the ETF to put cash in other things. And what they've done, and they just put it in short-term government bonds to get a little bit even more yield. So the MSTY ETF gains exposure to the price movements of MicroStrategy, which is almost the same as just owning MicroStrategy, right? If it goes up, the ETF is going to go up. If it goes down, the ETF is going to go down. And then what they do is they reinvest the cash. They invest the cash in short-term U.S. government bonds. But essentially, you're getting access to the price movement of MSTR. And that's the first thing, what it holds. The strategy is they're just selling the upside or selling call options on the MSTR stock. So, if you go to the MSTY webpage, you look at the holdings, you'll see a bunch of MSTR US, right? MSTR stock on the US stock market. You'll see a date, and then you'll see C 370. You'll see C and a number, C and a number. That's a call option, and this 370 is the strike price of the call option. So essentially, they're gaining access to the MicroStrategy, or now the strategy stock, and they're selling call options. And that's how they make such a big yield. So call option, when you're selling a call option, it means you're giving up or you're sacrificing the upside of the stock. So you're giving up MSTR stock price going up, or a portion of it, for that big premium, and YieldMax gives out the premiums earned every month in the form of a distribution, and that's how they generate the big distributions. Now, call premiums, whenever, you could sell call premiums on the S&P 500, the NASDAQ 100, on Apple stock, on whatever. It's the amount of premium you get or you receive is based on the volatility of the stock. So because MicroStrategy, or now Strategy, is such a volatile stock, that brings in a lot more premium. Hence the crazy yields you could sometimes see on MSTY. But volatility shifts every month. It's different. Like, for example, the last month MSTR volatility wasn't that high. It didn't move that much, right? So that's why you see MSTY, the recent distribution was $1.47, which is a lot lower than the $2.37 of last month. So people need to understand that the amount of, or the dividend or the distribution that MSTY is going to give is really based on the volatility of MSTR. If that volatility starts going down over time, the distribution is going to start going down over time. You're pretty much investing in super short, you're investing in strategy stock, and you're giving up a portion of the upside for that yield. Which means if MicroStrategy stock is flat or goes down, you're going to win. The ETF is going to do well, and covered call strategies do well when it's flat or down, because remember, when you're selling covered calls, you're giving up upside. But when there is no upside, you're getting those premiums kind of like free money. You know what I mean? But when the stock is going up and up and up and up, you're not going to capture all of that. You're going to lose a lot of that upside. You're still going to get the yield and the premiums, but you're basically limiting or capping your upside of the stock.
I got confused, at least when I look into it, because also the ETF has a price, right? I think it's $20 or $22 or somewhere in the region. Based on what you said and my little understanding, it doesn't actually matter how much the ETF is worth, only matters how much volatile MicroStrategy stock is, right? So that's where the yield is coming from.
Yeah, the stock price of MSTY will go up and down with MSTR. And if you just put MSTR and then MSTY in your stock watch app, for example, in your phone, you could see that when MSTR is up, MSTY will go up, but not up as much in terms of percentage. So when you're doing a comparison, don't look at the dollar amount, look at the percentage amount. So typically what you'll see, the behavior of many covered call ETFs is very similar. So if MSTY goes up 5% in one day, MSTY will maybe go up 3%. Like, you're not going to capture the full upside because of the covered calls. You're limiting or capping your upside. When MSTR does, let's say, the 0 or it's down 1% or 2%, MSTY is not going to be down as much. If MSTR goes down 5%, well, MSTY is maybe going to go down 3 or 4%. So why does that happen? Well, because the premiums earned is the cushion for downside. So once you watch it every day, if you just put MSTY next to MSTR, and there's a bunch of MSTR covered call ETFs now, you'll see very similar behavior. Some are leveraged, some are not. So MSTY is not leveraged. The YieldMax one does not use leverage. So typically, and I think MSTR is down today. I'll just check. It's Friday the 13th. So we're Italian, so the 13th is actually a good luck for us.
And here's why I think MSTY or MSTY is actually very interesting to my perspective, because, if you think about, for example, strategy or Bitcoin or any other asset, in order for you to quote unquote make a profit, you will have to sell the stock or the asset. Whether MSTY or MSTY gives you a passive income, right? So you invest a chunk and then every, I think, ninth of the month or something, you get paid a yield. So it could be interesting because if you are a Bitcoiner, or as much as if you are someone who owns a bunch of stocks and or real assets like gold and that kind of stuff, you have to sell them.
That's kind of the story for the way I invest. And it's the biggest problem that growth investors have, right? When you're buying a stock that has no dividend, or you're buying the S&P 500 or MSTR, you might see your account, you're plus 10%, 20%, 30%, but you actually didn't make any money until you sell. So you always have that problem. When do I sell? How much do I sell? What do I do with the money afterwards? You're looking at it every day. You're stressed. Then it goes. Then you didn't sell it, and it goes down. Then you get frustrated. My style of investing, the income-oriented style, I always say you never have to sell anything. You buy the assets that you like, whether it's MSTR, whether it's Bitcoin, whether it's S&P 500, whether it's like a technology stock sector. Now you pretty much have covered call ETFs for everything: single stocks, indexes, a group of stocks, like a particular sector, like I mentioned. And basically you're investing in the same stocks, MSTR, S&P 500, but every month and sometimes every week, some of them pay weekly, you're going to get a distribution. So you got to remember that the distribution actually comes out of the net asset value of the ETF, right? You got to remember that. So this is why, MSTY, like you said, it pays on approximately the 9th of every month. But on the X date, so whenever an income-oriented ETF pays you, there's always an X date and a payment date. X date is the day where they're removing the dividend from the net asset value of the ETF to give to you on the payment date. So for MSTY, for example, if the dividend is $1.50, the day of the X date, when you wake up that morning, the stock will automatically go lower by $1.50, because they're taking out that dividend and they're going to give it to you in cash. And when I say 150, I mean 150 per share, whatever per share is. They're going to give it to you on the payment date. So this is why when you look at a stock chart for a very high yield income oriented fund like MSTY, the stock chart never looks that great, because you're not seeing all the dividends being paid out to you if you look at a stock chart. You have to look at the total return or the performance of the whole ETF, which is the capital or the stock chart plus all the dividends that they gave you, right? So let's say MSTY, the yield max, doesn't pay any dividends. They still do the same strategy, but they give out no income. Well, the stock price would look much, much better and be much, much higher, because the stock price would be whatever it is now, plus the $1.47, the $2.37, the $1.33. You know what I mean? Like, that's being taken out every month, given to you as cash, and you do whatever you want with it. You could reinvest it and buy more shares if you want, or you could spend half of it, you could spend all of it. Some people invest it, some people take it and just put it in MSTR. There's, the income oriented strategy, you have a lot more flexibility than a more growth oriented investor who buys low and sells high. That's the only way they make money. Income investor like myself, we buy the assets you like. Every month you get paid. You get that income. That is pretty much pure profit. And you do whatever you want with it. But of course, your capital is not going to grow as much as if you would buy MSTR on its own.
I do believe at some point, potentially the end of the year, there's going to be a big correction, because that's what Bitcoin does. It goes into a banana zone. It goes crazy, which we haven't seen yet, I believe. And then it's going to correct in between 50 to 90%. I don't think we'll see those big corrections yet, because those days are over, but we will see maybe a 40 to 60% correction. So if that happens, then technically MicroStrategy or strategy should see a dump. The strategy for strategy is to acquire Bitcoin, hence why the stock goes up in value. So if Bitcoin gets a 50% chop, technically I'm expecting the stock also to go down, right?
Personally, I don't really think about price predictions, what something is going to do. I'm an investor. I'm not a trader. So I'm going to hold MSTR or S&P 500 or NASDAQ 100 forever. I like the assets. If it correct, and I'm someone who buys more shares every month. So basically, I have a portfolio. It has 8 funds. Every month, I get my income. I don't have the drip on, so I don't. It doesn't automatically reinvest and buy more shares. I like to do it manually every month myself. Decide where to put my money. So every month I get my monthly income. All my other income sources, I wait until everything comes in. I pay off all my expenses, and whatever's left over, I reinvest. I invest in my portfolio. I buy certain things. So I'm someone who's planning on never selling and buying a little bit more every month. So to me, price drops, price corrections, recessions, depressions is welcome and great news. Obviously, it's nice when things go up, you see your account go up. But if I'm not going to sell anything, it doesn't really make a difference if I wake up and my account value is a million or 1.5 million or 2 million or 2.5. I'm not selling anything. I'm only living or using that income. That's my philosophy, and that's really the passive income investing philosophy. That's what my channel is based on. But I don't know, and I don't personally, I think we're long past where Bitcoin could drop like 40% or 50%. I think we're past that phase. I think now it's more and more a legitimate asset. I think there's much more tailwinds than headwinds. For Bitcoin, you got the administration. Maybe we could discuss this. You got the White House administration. You got companies piling in more and more Bitcoin treasury companies, GameStop. I don't think it's even possible for a correct like 40-50%. But if it does, I'll just buy more. So it's not a problem for me.
The only reason why I've asked is because I wonder what would happen to MSTY.
So MSTY will go down a little bit less than MSTR because of the covered call strategy. And that goes for anything covered call strategy, right? So when you're doing covered calls on something, it typically does better than just holding the asset on its own. For example, with MSTR. So if there's a big dump, if just like I told you, if MSTR goes down 5% in one day, MSTY will go down 4%. It will do better because there's the call premium. That's the cushion. It's being given out to you on every month, but it doesn't go down as much. That's the behavior. So if it goes down, 10%, I'm assuming MSTY will maybe go down 8%. Plus, when something goes down really quick, there's a lot of price movement, price action, volatility goes up, which means MSTY is going to take in even more premium, so we could expect even bigger payouts, most likely. Depends on the drop. Sometimes if the drop is too severe, you'll see the payouts go down as well. But the more volatile the stock is, and this is what Michael Saylor is taking advantage of, the volatility, the bigger the call premiums you could get. And that's why MSTY has these really big yields some month of 90%, 100%. And I had the guy, the main architect, or the guy who does all the options for YieldMax, the head guy, Jay Pestricelli, who's also Italian, by the way. And he says that the yield is going to be more or less similar to the volatility percentage of the stock. And typically you measure the volatility in 30 days. And if you actually go to Strategy's dashboard, right? I look at it every day, right? The dashboard, the MSTR metrics. At the bottom, at the last one at the bottom left, you'll see implied volatility. So that is the implied volatility of MSTR, right? So the higher that is, the more call premiums you could say MSTY is making. The more calm the stock is, the less volatility there is, and the less income or the less premium MSTY will make. And that goes for anything, by the way. What I just said goes for anything covered call.
I was under the impression that the only way for MSTY holders to make money was for Strategy to go up. But even if there is a big drop in the stock, then it's either way. It's, as long as it's volatile, right? It doesn't matter if it goes up or down.
The performance of MSTY will always be tied. The primary indicator of performance will be MSTR. So if you hold MSTY and MSTR crashes, MSTY is going down as well. It's going down as well. But people who hold MSTY instead of MSTR have a big advantage. They'll still collect income every month, and They don't have to sell. They're still making money. And then when MSTR goes up, MSTY will recover, but not as much. That's what the covered call does. It caps the upside. So the advantages of an actual covered call strategy is actually during the bad times, if you think about it.
I am all in Bitcoin. I have next to no fiat under my name. I don't sell Bitcoin. Even if we see a correction, like I've seen in the past, I've actually seen 90% of my portfolio going down and I didn't sell. So I'm not going to sell a 40%. I'm going to laugh at it. But the argument is, okay, I have an asset, which is Bitcoin. And in order for me to sustain my life, I have to sell some of it. So I have to look after my expenses, and every now and then, whenever I need to, I sell a portion and I leave for another year, depending on the plan. Now with MSTY, I can sacrifice indefinite a portion and say, how much cash flow do I need every month? I don't know, $10,000. Okay, how do I get $10,000? Well, I sell a chunk of my Bitcoin portfolio, I invest into MSTY, and technically I don't have to sell ever any of my Bitcoin because the MSTY that I purchased is going to give me my passive income.
Your thinking is good. And sorry if I interrupt, it's a mistake because we're in a different time zone. You're on the other side of the world, so there's a bit of a delay, but that's okay. We'll get through it. Yeah, it's important to understand. So now your reasoning is right. By investing in MSTY, you are investing in MSTR, and that ETF is selling call options, a lot of call options. So here's the thing, because now there's not just MSTY, there's IMST from Bitwise. There's MSII from Rex Shares. There's MST from Defiance. And then there's even the ones in Canada as well. So they're all kind of doing the same thing. They are running a covered call strategy on MSTR. But you have to remember, the more covered calls that they sell, the more upside you're giving up, but the more income you're taking in. So each fund manager has a different strategy. And the trick of understanding is how much covered calls are they actually doing? The more they do, the more income you're going to take in, but the less upside you're going to capture of the stock. So some people, it's called yield max for a reason. Yield max does a lot of covered calls. So they are giving up a lot of upside. The disadvantage is MSTR starts taking off, they're not going to capture all the upside like another ETF who's, let's say, doing less covered calls. So MSTY, Yield Max in general, they do covered calls on 100% of the portfolio. And I know this for a fact because I've spoken to them many times. They've come on my channel many times. It's called Yield Max for a reason. It's been created for maximum yield. Now, it's not like you're not going to capture any upside. You're going to capture some upside, but they cover 100% of the portfolio. So in the bad times, MSTY is going to do pretty good because it's writing a lot more covered calls than, let's say, someone else. But now you have, for example, let's say you're okay with a bit less yield, less income, or less covered calls, and you want to capture more MSTR upside because you're more bullish. You're very bullish on MSTR. There's other options now on the US market. So you have IMST from Bitwise, which is actually not leveraged. Like MSTY, Yield Max, they don't use leverage. IMST is not leveraged. And from looking at it, and again, the best trick you could do is in your phone app, put MSTR, then put MSTY, then put IMST, then you could put MSII from Rex and MST from Defiance, and you'll see every day if MicroStrategy goes up, if it goes down, if it's flat, and you look at the percentages, you'll start understanding the behavior of the ETFs. And it's really about how much upside am I giving up. So you have IMST now, which is very, very high yield. It just started. It only has 1 month of dividend. It was very, very, very high because May was absolutely a great month for MSTR. But you have MSII, which is very, very interesting. And I would say is probably going to be Yield Max's biggest competition. And to be honest with you, the format of MSII, which is the Rex shares one, that's the type of format that I prefer as an income investor for everything. So the type of format that I like or that I try to invest in, whether it's S&P 500, NASDAQ 100, MSTR, or Bitcoin, which is the main four things of my portfolio, is covered calls, but only on 50% of the portfolio or less, which means by default, you'll capture 50% of what MSTR does. Yield max covers 100%. So if MSTR goes up really hard, you're going to capture more at upside than MSTY. But of course, if you're capturing less of the portfolio with covered calls, or you're writing on only 50% covered calls on the portfolio, not 100, you're going to take in less premium. So the yield is going to be lower. The monthly payouts are going to be lower. But if you're really bullish on MicroStrategy and by default Bitcoin, that ETF is probably going to do better total return wise than the one who's doing a lot more covered calls if it goes up over time. So MSII does on a maximum of 50%. And here's the special thing, in my opinion, it's a special thing. They use a little bit of leverage in the fund, about 25% leverage. So in Canada, the leverage that we have, they just borrow the money. They borrow 25% of the fund's net asset value. They pay the interest rate, whatever the Bank of Canada interest rate is, plus maybe 50 basis points. So right now it's maybe at 3.25, 3.50 interest. So they borrow money at 3.5 interest, and it enhances the ETF. It enhances the yield, it enhances the return, but it also enhances the downside when there is downside. It just, everything moves 25% typically more, up or down. That's the format I like. Covered calls, I love, but not more than 50% of the portfolio, which, remember, when you're doing covered calls on something, you're limiting the upside by default. So over time, if that asset does really well, like S&P 500, NASDAQ 100, or Bitcoin, or whatever it is, you're always going to have less total return than if you would just own the Bitcoin, than if you would just own the S&P 500 index fund. I like income. I love covered calls. I love the monthly income, but I don't want to sacrifice that much performance over time. So this is why the 25% leverage is a good amount that helps you pretty much the performance get similar to holding MSTR, to holding the S&P 500. It's kind of like the magical number. That's the format I like. So now MSTY, very big, very popular, has some competition with MSII. And then you have also MST from Defiance, which, still a cover call strategy, same thing, you're giving up upside, but it uses up to 150 to 100% leverage. So even more leverage, right? So this is where, as an investor, if you want to invest in strategy with income, cover call, you have 4 choices now. And by the time this conversation's finished, maybe there's going to be another 2 choices, right? But in the US, there's really 4 main choices. You have MSTY, you have IMST, MSII, MST. The more bullish you are, the more risk you're willing to take. If you're really bullish, you want to take maximum risk, you'll go with MST because it has more leverage, cover calls, and much more leverage. But on a down day, it's going to go down a lot harder than MSTY. You know what I mean? So lots of choices, but you're all investing still in MSTR. So your faith is still going to be tied to MSTR. But what it does on a day-to-day basis, week to week, how much income you get depends on the strategy of each fund.
If I had a job, a fiat job, and I had an income, who cares? I buy Bitcoin, I park it on the side, and every 10 years I do the math. But if you live into the Bitcoin standard like I do, which means I have next to no fiat, well, every now and then I have to be forced with a decision, which is how much do I sell?
It's a hard decision that nobody ever wants to make.
What I like about MSTY, and I understand the fact that I won't be able to outperform Bitcoin, but I don't buy MSTY for that reason. I buy it for a cash flow. And that means I don't have to touch my asset. So I can leave my Bitcoin alone into my self-custody or whatever system you decide, or into an ETF, for example. And with the cash flow, with MSTY, I can pay for my bills.
Yeah, it's a great system for you Bitcoin maximalists, because not in the real world right now anyway, not many people take Bitcoin. You can't pay your bills with it. Maybe some places you can. I think eventually it's going to get better and better. You'll be able to use your Bitcoin. I've spoken to a few Bitcoin maximalists in Panama who were really early, and they're multi-millionaires. They, of course, they can't wait for them to be able to pay everything in Bitcoin because they're sitting on it. But right now, this is a good alternative because you're kind of investing in either MSTR. And by the way, I see MSTR as a leveraged investment in Bitcoin. That's what Michael Saylor keeps saying. If I remember correctly, he says if you want to outperform Bitcoin, you buy MicroStrategy. MicroStrategy is approximately 1.5 to 2x leverage Bitcoin. Obviously, there's other factors involved. The biggest factor is Bitcoin's price with MicroStrategy, but there's other little things involved because it is still a publicly traded company. But like you said, if you can't pay your bills in Bitcoin, but you don't want to sell it, this is a way to at least invest in MSTR. And there's plenty of Bitcoin covered call ETFs too, where you could invest literally in ETFs that typically what Bitcoin covered call ETFs do, they will just buy IBIT, the biggest, most liquid Bitcoin ETF in the world by BlackRock, right? I'm sure all your audience knows. Very big, very popular, 70 billion, the most successful ETF of all time. And they write covered calls on IBIT. The MSTY, they buy MSTR and they do covered calls on MSTR. So if you rather prefer owning the Bitcoin, you could do the same exact thing. You could buy Bitcoin covered call ETF, and these ETFs will basically hold IBIT. So it's like you're buying Bitcoin, you're giving up some of the upside of Bitcoin, but you're getting that cash flow. And there's several of them. There's actually 5 of them. There's probably more now, but you have YBTC from Roundhill. That one gives weekly income. You have BTCI from Neos, monthly income. You have BITY from Amplify ETFs. That one targets 2% a month yield. You have Baggy from the same company that does maximum covered call. So it has like 30% yield. So, and this is where it's important to understand covered call strategy, covered calls. You go on each website, you read, and you get the one that's best designed for you. Some people want more yield, maximum yield. They're willing to give up more upside, or let's say maybe they're a little bit skeptical of Bitcoin. If you're skeptical of something, you're going to get a lot of covered calls on it because you're giving up the upside. But let's say you're really bullish on Bitcoin and you're very, very happy with, let's say, 24% yield a year, you'll go with maybe something like BITY from Amplify ETFs. So if one of them has 40% yield or 30% yield, BITY has 24, and it's the same asset, it's very simple. They are writing less covered calls, which means if Bitcoin does really well, you're capturing more upside. You're going to get more return. But if Bitcoin is flat or down for 6 months in a row, let's say, MSTY or for Bitcoin, the ones doing a lot more covered calls are going to do better, right? So it depends how bullish your time horizon. If you're really, really bullish, I would say the best one for Bitcoin right now is probably BITY, BITY from Amplify ETFs, because they're only covering like a portion of the portfolio and they're only trying to get 2% yield a month for you. They'll get 2% yield for you a month, and the rest you'll capture the upside of Bitcoin. There's others that will do more covered calls, so you'll get less upside, but you'll get more yield. Your monthly payments are going to be bigger. So, and then you could mix and match them as well. There's nothing wrong with that. So I know it could be very confusing for your audience members if they want to invest in a Bitcoin covered call ETF or an MSTR covered call ETF. I would say they're all investing in the same thing, but it's the amount of covered calls they're doing. That's what's different. And typically, the general rule of thumb, the higher the yield is, the more covered calls they're doing, which means the more upside you're giving up. The less yield you have, the more upside you're capturing.
This year, this April, Bitcoin has gone up 14% in a month. Now, if you would have done MSTY, you wouldn't have had the 14% because they would have sold on the way up. Well, then you will lose all that pump, but you will have a passive income. So again, I don't think you should look into MSTY to outperform Bitcoin or MicroStrategy, but to have that kind of passive income. And there's something I wanted to ask you here, because so far, I'm sold in MSTY, but what could be the downside in owning MSTY versus Bitcoin, or what could go quote unquote terribly wrong?
MSTY, it's tied to the underlying asset. So the question, you could rephrase your question, what could go wrong on MSTR? So the prices, the value will go up and down based on the asset underneath. That goes for any covered call strategy. I always say you got to look past the stock ticker, right? An investment in MST, everyone, I'm investing in MSTY, I'm investing in BIDI. No, you're investing in MSTR, you're investing in Bitcoin or in the IBIT ETF, which is kind of Bitcoin. So what could go wrong? Whatever goes wrong with the asset, up or down. Another thing you got to remember, like we discussed, is that, and Michael Saylor talked about this, he's like, over the years, volatility on Bitcoin should drop, should go lower and lower and lower. Now, if that happens over time, the yield of these ETFs is going to go lower and lower because the yield is based on covered call premium, which is based on volatility. Just like gold, gold, there's gold covered call ETFs. They make like 5, 6, 7% yield, not like 25 and 30 like Bitcoin. Why? Because gold is very low volatility. People buy it for low volatility. So if Bitcoin ends up being the digital gold of the 21st century and people are buying it for safety and the price is more stable, the volatility is lower, the yield on these covered call ETFs are going to go lower as well. You're gonna take in less yield. But of course, if you bought it really early, your stock price is going to go up and up and up and up and up as well. Not as much as owning the underlying asset. Like basically, if MSTR or Bitcoin keeps going up and up and up for the long term, MSTY will never, ever, ever beat MSTR. It's impossible, right? Because it has a higher fee. Owning MSTR has 0 fee. Owning MSTY has almost a 1% fee annually, and you're giving up upside. So if we just compare MSTY to MSTR total return wise, if you would have put $10,000 in MSTY and $10,000 in MSTR on the same day, the day that MSTY came out, which is the end of February of 2024, your 10K in MSTR would be worth 53,000. Your 10K in MSTY would be worth 38,000, almost 39,000. So there's a big gap in performance. So yes, you're getting the income every month, but if the asset does really, really well, you're giving up a lot of that upside. But of course, the advantage is at least you don't have to sell anything. You're getting your cash flow. So these are really designed for cash flow, not to beat MSTR. So this is why personally for my MSTR, I don't own MSTY anymore. I own the Canadian one, and the Canadian one does covered calls on max 50%, and there's 25% leverage. So in May, I did a video, MSTY versus MSTY, which is the Canadian one. And in May, MSTY had very similar identical total return as MSTR, whereas MSTY underperformed by 10% just in that month because MSTR skyrocketed. Now, if there's a really bad month, MSTY is going to do a little bit better, right? But if you're a long-term bull, if you're a long-term investor, this is where everyone has to make your own decision. If you're really skeptical of MSTR, then you would probably go with more something like a MSTY where they're doing more covered calls.
I don't actually care about the upside because that's how I have Bitcoin. For example, let's say for the easy math on this conversation, let's say someone has 10 Bitcoin, right, which is more or less $1 million, and they have to sell some of the Bitcoins every now and then to survive and pay bills and whatever. Now, if they would sacrifice 10%, right, of their Bitcoin portfolio and buy MSTY, so then they could sell 1 Bitcoin, for example, which is 10%, buy MicroStrategy leverage, which is MSTY, and then with the passive income that you get on a monthly basis, you pay your bills, right? So you are not going to outperform the asset itself, which is Bitcoin and or MicroStrategy, but you'll have the option to have a passive income. So whenever we compare the returns, like you said in the beginning as well, yes, MicroStrategy stock has done better, but you would have to sell it because it doesn't give you yield. So this is where MSTY, for me, could be an interesting play in your portfolio if you need cash flow every month.
It's perfect that way. What you just said is perfect. Yeah, I know I focused a lot on total return and performance, and that's what I'm focused on a lot as an income investor. Income, yes, performance as well. But like you said, there's absolutely nothing wrong. If your objective is exactly what you said, if your objective is not return and it's maximizing cash flow, Yield Max is a great ETF provider for you because that's exactly what they do and what it's designed to do. It's literally in the name, Yield Max. If maximum yield and income is your priority, not return, and you're okay with sacrificing the return, whether because they do a strategy like you just said, I'm going to sell my 10% of my Bitcoin to invest in this so I could get this freaking fiat crap to pay my bills,
Yeah.
but 90% of my Bitcoin I won't touch. That's actually a pretty good strategy. Then MSTY would be a really good one for you, or something even like an MST, which has weekly payments, which is Defiance, which has a lot of leverage, and you'll probably get similar, if not maybe even higher yield than Yield Max. And by the way, Yield Max, Defiance, they're all under the same parent ETF conglomerate called Tidal ETFs. The options teams, I believe, are the same team, or it's the same parent organization, if you will. There's many options. This is where you have to analyze each one and go with the strategy that is best designed for your personal objectives. If maximizing yield is your personal objective, well, guess what? Yield Max was designed for that. And they don't just have MSTY, right? They have a bunch of other ones. They have some on the S&P 500, on the NASDAQ 100 that pay weekly. They have one of my personal favorites is called YMax. All the Yield Max ones. So there's Apple, there's Microsoft, there's MicroStrategy, there's Carvana, there's Airbnb, there's maybe 35, 40 of them. They're all in there. Let's say you don't want to pick and choose. You could just choose YMax. You'll get I think 30% yield or 40. It varies a lot based on volatility, but you get paid weekly. So there's a lot of really cool weekly paying ones. And I think Defiance is coming out. They just filed for one that paid twice a week, a NASDAQ and an S&P. So it's getting crazy on the US side. There's a lot of options now, a lot of providers that are providing these high yield, weekly paying or monthly paying ETFs.
And that's why people have to follow you on your beautiful channel so that they can stay updated to all those beautiful ETFs that you just mentioned.
I'm telling you, I'm having trouble keeping up. I think I need like a team or something. It's very hard to keep up because there's so much. Like in Canada, it's a lot smaller. There's only 5 or 6 main players, but now in the US, it's just exploding. It's very hard to keep up. So in case your audience is very confused, just make sure you analyze the strategy and you pick the one that's best fits for you. Is it return? Are you bullish? Is it maximum income? And don't forget, it's never wrong to also combine a few of them too. Combine a few ETFs as well to get multiple strategies on strategy, or multiple exposures and strategies on Bitcoin as well.
Exactly. You could say that 10% I want to quote unquote sacrifice. It could be made by 5%, 3%, 2%, mix and match with a few different strategies. Thank you so much. It's been an absolute pleasure having you on the show. Thank you for clarifying it so well. Now I feel like I understand MSTY.
I'm happy you do. It's a good idea. I like the idea that you came up with. Let me sacrifice a little of my Bitcoin and put it into MSTY, which is kind of like leverage Bitcoin exposure, which is good. And I'll get that monthly income. Of course, you got to remember that monthly income is going to vary greatly. A lot of people, when they see a much smaller dividend from the month before, they think there's something wrong. It's the fund manager didn't do anything right, or there's a problem. It's not. It's just based on the volatility of the stock. The fund managers of these ETFs, trust me, they're doing mostly the same thing every week, every month. They're selling a certain amount of call options on a certain amount of the portfolio, and they're giving all the income out to you. The income is going to vary. This is not a dividend stock like owning AT&T or Verizon, or you know what I mean. This is call premium. It's not dividend income, because remember, MSTR has no dividend. This is pure call option premium. You're sacrificing upside for a massive amount of yield, which could be great for someone like you who need some fiat to pay their bills, but they don't want to touch 95% of their Bitcoin and just let that organically grow over time. It's a good strategy.
You'll have to do it anyway because you'll have to sell Bitcoin on a monthly base or on a quarterly base. So you're not escaping the fact that at some point you have to touch your asset and sell some of it. So by sacrificing a portion, then I can save my stack forever. If you want to protect your Bitcoin stack, that's probably one of the best play because you will never, unless your expenses, they go up, if you plan accordingly to how much cash flow you need. And like you said so well, it's not going to be exactly the same number because it depends on the volatility, but you can eyeball it, right? You can say, okay, I need more or less this amount. And when you get more, you can stack it maybe, for example, and save it. So you can design a plan where you can technically never sell your Bitcoin because you will sacrifice a portion that is going to give you forever income.
It's honestly a beautiful plan. And that's a very important philosophy in the way I invest. I never want to sell anything. I developed a system where I don't have to sell anything. And people underestimate how important that is because if you do have to sell something, guess what? And another thing that's very important is the time and all the energy you spend thinking about when do I sell, how much do I sell. Bitcoin is down. I have to sell some this month. Some people, for example, they'll buy the S&P 500 or they'll buy Bitcoin, and every month they'll sell a little bit. But every month they got to go in and decide how much do I sell, and it's down. I don't want to sell. What's the price? This is all, you liberate your mind and time. You gain so much of that time and energy, which I'm sure you'll agree with me. It's the most important thing, right? Time,
100%.
Energy. So you save by developing a certain strategy where you never have to sell X. Whatever it is, you gain a lot of that time back. And that's one of the important things of my investing philosophy. I want to be able to never sell anything because I don't want to spend time thinking about it, energy thinking about it, stressed about it. I don't want to look at the price every day knowing, well, how much is it up or is it down? I don't care about the prices. I don't follow the stock market as much. I don't look at it every day because I don't need to. Why? Because I don't have to sell anything. It's a beautiful thing.
Time is still my favorite asset.
Of course.
On that one we agree. But thanks, man. As always, guys, of course, in the description you will find Adriano and Passive Income Investing. You have to go and give him a follow. It's one of my favorite channels. So thank you so much for doing this with me, man. I really appreciate having you on the show.
It was great being here with you, and hopefully we'll do this again. Good luck with everything, my friend.
And thank you so much for watching, guys. I will see you on the next one.